All right, so we're taking a deep dive today into something that has the entire commercial real estate world buzzing.
Yeah, buzzing is a good word for it.
This recent interest rate cut.
Right.
What does it mean?
What does it mean for CRE?
We've got CoStar, we've got Cushman and Wakefield, Narite, Bisno.
Yeah, a lot of takes on this one.
A lot of takes because it's kind of a big deal, right?
It is a big deal.
So let's
Jump in.
Let's jump in.
Right.
CoStar is reporting that
Okay.
some big names in office REITs, I
Mm.
think Brandywine,
Okay.
are breathing a sigh of relief
Yeah.
after over a year of the Fed just slamming on the brakes
Right.
with all those interest rate hikes.
With aggressive rate hikes.
This feels like maybe things are easing up a little.
Yeah, it's definitely a signal. I mean, the Fed doesn't just, make these decisions willy-nilly.
Right.
Cushman and Wakefield points out this could be a bigger shift
Okay.
to a more supportive financial environment overall.
Okay, so that's got to be good news, right?
Yeah, for investors, this is potentially huge.
Huge. But CoStar also mentions that the office market is still
Still hurting.
hurting. Yeah, people are working from home.
Exactly.
Companies are shrinking their spaces.
Right.
So does this rate cut change any of that?
That's the big question, isn't it?
Yeah.
I mean, it's definitely going to make borrowing cheaper.
Right.
Could stimulate some deals, but it doesn't change the fact that we are using office space fundamentally differently.
Okay, so not time to break out the champagne then.
Well, I mean, not quite yet. Think of it this way. The economy's a car.
Oh, okay.
The Fed slammed on the brakes with those rate hikes.
Right.
Now they're easing up a bit,
Okay.
but they haven't taken their foot off the gas.
Right. We're off the brake, I should say.
Right. We're
I know,
still
but
easing
we're
into
still
it.
easing into it, yeah.
Cushman and Wakefield actually uses the term neutral zone to describe this,
Okay.
where rates are now, they're still higher than neutral,
Mm-hmm.
meaning the economy is still
Slowing down.
still being tapped on the brakes. Yeah,
So it's a step in the right direction.
exactly.
But not a complete U-turn.
Not a complete U-turn. And that's what's so interesting.
Yeah.
This mix of reactions you're seeing.
Right.
Some people are excited. Some people are still really nervous.
Right. Cushman and Wakefield called them green shoots.
Root shoots.
Yeah, these little signs of
Some
optimism.
little bits of optimism popping up.
And they point to an uptick in sales and REITs in particular.
Yeah, REITs are interesting.
They seem to be.
They're on a tear.
Yeah.
Narite, which, follows REITs very closely,
Mhm.
points out that they took a hit early on when rates were rising so aggressively.
Right.
But now
Yeah.
they're actually in a really good position to make a comeback.
Okay.
Strong balance sheets,
Yeah.
access to capital.
So they're ready to spend some money.
Spend some money, like go on a shopping spree for,
Exactly. They've been waiting for this moment.
wow.
And Cushman and Wakefield even points to this big pile of dry powder out there.
Dry powder.
Billions of dollars
Wow.
just sitting there waiting to be invested.
So this rate cut might be the thing that,
It might be the nudge
It's a-
that gets things moving. Wow. So that's a lot of money
yeah, a lot of potential.
waiting to come into the market.
A lot of potential, but also a lot of uncertainty.
Yeah, that's the thing, right? Bisno,
Bisno really captures it well.
they talk about the mixed reactions.
Mhm.
Some people are popping champagne.
Yeah,
Others are like battening down the hatches.
definitely still some fear out there.
Yeah, uncertainty seems to be like the
The name of the game.
name of the game right now.
And it makes sense because
Yeah,
this rate cut alone doesn't solve everything.
right.
Bisno quotes a bunch of experts talking about inflation.
Still a factor.
Still a fact.
Construction costs.
Through the roof.
Yeah. And then there's this whole psychological element, right?
Market psychology.
How do people feel
Huge factor.
about all this? Yeah, it's like everyone's trying to figure out which way the wind is going to blow next.
Right. One expert in Bisno even said it's like trying to steer a ship in a storm.
Ooh, I like that analogy.
Yeah, you got to be ready to adjust course quickly.
Definitely. And speaking of adjusting course,
Yeah.
this rate cut could shake things up across different types of commercial real estate.
Absolutely.
I mean, we've been talking about the office market, but what about industrial real estate?
Oh, industrial real estate.
All those warehouses
Right.
popping up everywhere for e-commerce.
That's the sector that's really poised to benefit from this rate cut.
Oh, okay. How so?
Well, think about it. Cheaper to borrow money.
Right.
Easier to build new warehouses,
Hmm.
which is exactly what we need with everybody shopping online.
Right. It's like adding fuel to the fire.
Yeah, exactly. And it's not just about construction either.
Right.
The companies operating those warehouses lower interest rates could mean lower operating costs for them.
And lower costs for consumers like me.
Exactly.
Hmm.
Maybe even cheaper online bargains.
Okay. I'm listening.
Yeah. So industrial real estate is definitely one to watch.
Okay, so industrial, good. What about retail and multifamily?
It's a mixed bag.
Okay, how so?
Well, retail, especially those traditional stores,
Yeah.
they've been struggling.
Yeah, with online shopping and everything.
Exactly. And this rate cut alone, it's not a magic solution.
Right, it's like trying to fix a cracked foundation with a new coat of paint.
That's a good way to put it. It might look better on the surface,
Right?
but those underlying problems are still there.
Yeah. But it might help some retailers, right?
It could give them some breathing room, especially those struggling with debt or looking to refinance.
Okay, so there's hope.
There's a little bit of hope.
Yeah.
And it could make those mixed-use developments more attractive.
Right, combining retail with apartments or offices.
Exactly.
Okay, and what about multifamily?
Everyone needs a place to live.
Right.
Multifamily has always been pretty resilient,
Hmm.
and lower interest rates could make it easier for people to buy homes.
Okay, but wouldn't that hurt the rental market?
Actually, it could have the opposite effect.
Really? How so?
More people buying homes could actually increase demand for rentals.
Okay, I don't quite follow.
Think of it as a chain reaction. Lower rates boost homeownership,
Okay.
which then creates more demand for rentals.
Oh, interesting.
And don't forget the housing shortage.
That's right, we've got a housing shortage.
It's not going away anytime soon.
So that's going to keep demand high for both
Right.
owning and renting.
It's all connected.
Wow, so we're looking at all these different
Ramsey?
factors, short-term, long-term.
It's not just about today.
Yeah.
It's about how this rate cut could change things years down the line.
And how it affects each type of property differently.
Exactly. Office buildings versus warehouses versus apartments.
Right, different parts of the country even.
This isn't a one-size-fits-all situation.
There's so many moving pieces. It's like we're picking different paths.
Yeah, different scenarios playing out.
And some paths are more crowded than others, right?
Definitely.
Like that industrial real estate path seems pretty popular right now.
Everybody wants a piece of that warehouse action.
It does make you wonder, though, about those less traveled paths.
Yeah, like what?
Like what happens to all those empty office buildings,
Yeah, right. We talked about how the office market's still struggling.
even with this rate cut?
Exactly.
Yeah.
So what does that mean for those owners, those investors?
Yeah. Are we going to start seeing a bunch of buildings torn down?
Well, some people think so, but it might not be all doom and gloom.
Okay. How so?
Well, this cheaper financing could actually encourage developers to get creative.
Okay. Like what?
The conversions, turning those empty office towers into something new,
Okay.
apartments, maybe even mixed-use spaces with shops,
Yeah.
restaurants, you know,
Yeah, that's a cool idea. Kind of revamp the whole city skyline.
definitely a possibility.
Wow.
But some experts argue that the office problem goes deeper than just interest rates.
Okay.
It's about how we work now.
Right. Like remote work.
Exactly. So
Right.
even if borrowing is cheaper, will companies want those big offices?
That's a good point.
It's not just about cost anymore. It's about what employees actually need.
It's a whole new world of work, isn't it?
It really is. And the office market needs to adapt.
So maybe instead of demolitions, we'll see innovation.
Exactly. New ideas,
Yeah.
new ways to use these spaces.
That's exciting.
It's an exciting time to be watching this industry.
Definitely. And that's what we love about these deep dives, right?
Exactly.
Getting to really dig into these trends and see how they might play out.
Yeah, it's fascinating stuff.
So we've covered a lot of ground today, the impact of this rate cut.
Yeah, from industrial real estate to the future of office spaces.
It's a lot to think about.
And this is really just the beginning.
Right. The decisions made in the next few months, even years.
Huge impact down the line.
So to everyone listening, pay attention because the world of commercial real estate is changing fast.
And the more you know.
The better equipped you'll be to navigate it all.
Exactly.
Well said. Thanks for joining us for another deep dive.
Anytime. My pleasure.
Until next time.